financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. Well, as you heard, my name is Jerry Robinson. I'm an economist, author of the book Bankruptcy of Our Nation, and the founder here at followthemoney.com. We have a trend trading software here called the Profit Tracker Trend Trading Software, which allows you to look up any stock, any ETF, most cryptocurrencies, foreign currencies, and on and on. So for people who want to be able to follow the trend, we have a lot of members all around the world, and we are so grateful to do this podcast so regularly here. We appreciate you listening into today's podcast episode. And by the way, today's episode number is 430. Today's title, Trend Trading in 2023. So in this podcast episode, we're going to be exploring the world of trend trading, and I'm going to be providing a comprehensive guide, if you will, for beginners, because there's a lot of new traders out there who are wanting to learn how to trade. There's also many who are experienced but could benefit from learning more about trend trading. So that's what we're going to be talking about. And maybe I should just begin by defining what trend trading is. So trend trading is a popular and effective approach for traders who are looking to profit from the financial markets. And the way it works is that you seek to identify the direction of a market trend, and then you capitalize on it. So whether it's a stock or a commodity or a currency or an index or an ETF or a cryptocurrency, understanding how trends, work can help traders make informed decisions and potentially, generate profits, and consistently at that. Now, I should say also, this episode is really specifically geared and designed for beginner traders, who are new to the world of trend trading. We're going to be covering some essential concepts and as well as some strategies that traders need to know to get started. So whether you're a complete novice or even if you have some experience in trading, I think this episode is going to provide some valuable insights and tips. So let's, think about where we are right now. Here we are in 2023. This is an interesting year as we have just come through one of the worst market downtrends in recent memory, 2022. 2022 was brutal. When you think about across the board, whether it was bonds, whether it was cryptocurrencies, whether it was stocks, there was just very few places to hide. Even many commodities, not all, many commodities went up. Energy was the big winner last year, of course. But there were very few places to hide. We taught and teach our members to use inverse ETFs or options to be able to profit in down markets. And this is the power, by the way, of trend trading, is that our trend trading system was able to identify that the market was turning over, very early in the year, which is why we were telling our members how to profit from a bear market, in January of 2022. So practically a year ago, we were already sending out emails to our members explaining, here's some inverse ETFs, here's some put option ideas. This is what we do. So we keep our thumbs or our fingers on the pulse of the market, and we provide our members with, cutting edge ideas, whether it be trading ideas. Also, we provide investing ideas. But today's really about trading. So let's just stay focused upon that. But now, when we think about last year's sell-off, we realize that it actually created what I think could be a massive opportunity for trend traders to begin positioning for what could be a very robust year of gains in several different areas. In fact, I recently shared our market outlook with our premium members, our gold and platinum members, in a recent coaching call. We do those live every Tuesday morning at 10. If you want to be a part of that, we're providing ideas right there during the live market hours. So it's really cool. Now, what we did in that coaching call back at the beginning of the year is I provided many different specific markets that we think could outperform in the year ahead. I'm not going to give you all the markets because that's what I gave to our members, but two of them were China, which is really doing well, by the way. That's been in a brutal downtrend since February of 2021. So it's practically been 2 years, a 2-year brutal bear market. Of course, China's reopening now. And so we've seen China really rebounding, Chinese stocks. We also mentioned another idea was cryptocurrencies. And as soon as the year began in 2023, we started seeing cryptos rebound. Our expectation, based upon our cycle work and trend analysis, was that cryptos were just going to, probably lead stocks to the upside. And we certainly are seeing that now. Whether cryptos will continue, in the coming months, we believe they will. As well as China. We think, obviously nothing goes straight up. But these are just two markets, for example, that we've been sharing with our members that we think will not only do well right here at the very beginning of 2023, but will probably end up doing and faring, pretty well throughout the rest of the year. Now, when the financial markets crash like they did last year, it often provides a compelling setup for those who are seeking profitable trading opportunities. So this is why, if you're new to the idea or concept of trend trading, now might be a really good time to lock in and think about it, to really think deeply about where this might be a good income stream for you. If you have some excess money that you can trade in the market, or, this is obviously speculative capital that you might want to use. We're not talking about, trading your rent money, obviously, but we're talking about money that you have for speculation purposes. Well, then, now could be a very interesting time to be honing your skills in this area and preparing for what could be a great opportunity as we head forward. In fact, if you're not familiar, we have a trend trading boot camp that we created for our members back in 2019, and you can actually get access to our trend trading boot camp. It's a 8-hour intensive course. You can learn more about it at followthemoney.com/bootcamp. But there I lay out all of the concepts and everything that you need to be able to, really turn trend trading into a part-time income. That's what we do. I like to part-time trade. I don't do full-time trading anymore. I did full-time trading for a period of my life, but it can be pretty stressful, So, and you've got to find the right kind of trading. I've done everything from day trading, swing trading, position trading. But when we talk about trend trading, we're really just talking about trading with the trend. You can do that as a swing trader. You can do that as a day trader. You can do that as a position trader. I choose to do it mostly as a position trader. So I'm a part-time position trader who uses trend trading strategies, for my overall approach. Now, let's talk about understanding trends, because that's obviously part of understanding trend trading. So to begin, let's define what we mean by trend. In the world of trading, a trend refers to the direction of which a market is going. So trends can either go up, they can go down, or you can just have no trend, like it's just sideways market. So upward trends indicate that the market is rising, obviously. Downward trends indicate that it's falling. But a sideways grind, where the stock or the ETF or the market is just not going anywhere, that means that there's just no clear direction. That's not really a trend. Maybe we would call it a sideways trend, but it's not really a trend. It's just a sideways grind. And so there are different types of trends, as we've said. There's upward, downward, and then whatever you want to call sideways, when it's just grinding sideways. It's usually consolidation after a extended period of up movement or down movement. And you'll often get a market that trends up and then it moves sideways for a period of time, consolidating those gains, and then it'll likely go back up again if it's locked in a big bull market or a nice uptrend. Now, there's also different types of trends, as I've stated, that traders need to be aware of. There's short-term trends. We call those swing trends for swing traders. Then there's intermediate trends. We call those position trends for position traders. And then there's long-term trends. Most investors like to know about those because those are really big. Those can really be meaningful. When you get a long-term signal, a long-term uptrend signal, those can last for quite a while. So short-term trends can last anywhere from a few days to a few weeks. Swing traders look for those, and we provide, here for our members, we provide every single day new swing uptrend alerts. So if you're looking for stocks that, hey, I'm looking for a stock that might go up, for the next, few days or few weeks, well, that we have that. We call those our swing uptrend alerts. And we provide those every single day of the week for our members who are traders. There's also intermediate trends, which we call position trends, as I stated. Those can last anywhere from a few weeks to several months. We have an ETF leaderboard for our members where we rank all of the top-ranked ETFs. We track 150 of them. And that's a really powerful service for those who like to position trade and specifically like to focus on ETFs. So that's really cool. And then finally, long-term trends, these can last for many months or even years. But understanding the difference between these trends, the short term, the intermediate, and the long term, that's important as it helps traders make informed decisions about when to enter and when to exit. And you've kind of got to know your strategy, got to kind of know your style. And we've talked about that in past podcasts, episodes. There's also many different factors that can influence the direction of a trend, right? And the strength of that trend. So we think of things like economic data, political events, market sentiment. So all of these things, can have some sort of impact upon the market. They're not the same thing. Of course, the economy is not the stock market. Stock market's not the economy, but the economy can cause a change in the trend if it causes, say, the Federal Reserve to react to that economic data. So everything is kind of interrelated in some way. And traders need to be aware of these factors. They need to know how they can impact the market. They need to be able to make informed decisions about their trades. And so it's important to note that trends can change quickly. Without warning, suddenly something can change. And so you've got to be vigilant. You've got to be adaptable to changing market conditions. Now, when you think about identifying trends, say, well, how am I going to identify a trend? What are some of the tools or the techniques that I would use? Well, once you understand what a trend is and the significance in trading that it has, well, the next step is to obviously learn how to identify trends. And there's a lot of tools and techniques and indicators that you can use to analyze trends, to make informed decisions about when to enter and when to exit. A lot of times people will use trend lines. They'll draw on the chart. I like to draw on the chart, print out charts and then draw on them. In fact, that's what I did early on when I was learning how to trade. I just constantly was drawing on charts, trying to understand how to identify those trend lines. And I would encourage you, if you're new to trend trading, it's one of the very best things you can do is print out charts, look at them, analyze them, and draw on them. Even with a pencil, and just work on seeing the patterns in the charts. You can also use chart patterns. There's like the cup and handle, there's the double bottom, the triple bottom, the double top. There's all these different kind of chart patterns that can emerge on a chart. That's very helpful for a trader. You can also use moving averages. I find moving averages to be extremely powerful for trend trading. And we teach our members here, which of the moving averages that we really like, which ones are really powerful. We also teach, we have a K channel strategy, for example, which is very, very popular with our members. That's great for trend trading. So there's lots of different tools that you can use, but it's important to use multiple tools. I think this is important. Even with our own profit tracker trend trading system that we've created here, it has a minimum of 3 indicators below the chart in addition to the moving averages. So we really have like 6 different indicators and oftentimes 7 that we're looking at. So you don't really want to use one single indicator to confirm a trend because that's just usually not wise. For example, you might want to use a trend line and a moving average and then maybe even a chart pattern to get a more accurate picture of the trend's direction and strength. And so we like to use technical analysis. We teach our members how to use technical analysis to identify support, resistance levels. Again, it makes it much easier to identify where to enter and where to exit. And when it comes to determining the strength of a trend, there's lots of different indicators for that. You can use momentum indicators. You can use oscillators. Momentum indicators include things like the relative strength index, helps you know when a market is overbought or oversold. Or you can use, stochastic oscillators, which help you determine if the trend is, gaining momentum or losing momentum. So these are all very important tools. Now, whenever you are thinking about trading and you want to make it something that you're going to do for, maybe a part-time income, what you have to have is just like with any other business, you need a plan. So you really need to develop a trading strategy, and you need to have a trading plan when it comes to trend trading. So having a well-defined trading plan crucial for success in trend trading. This plan should include a strategy on how to enter and exit trades. You know, what are your rules for entry? What are your rules for exiting a trade based upon the trend? And it should also include risk management, strategy. So I'm talking about stop losses. You've really got to minimize potential losses. And we've talked about this so many times, the importance of using stop losses if you trade. I don't use stop losses a lot in my long-term investing, but when it comes to trades, I never trade stock, ETF, or whatever without a stop loss. I just don't do it because a trade is speculative. An investment may be something that I've planned and I'm going to hold for the long term. So I'm not really looking to sell if it goes down. I may want to add more if I have like a 10 or 20 year time horizon. I don't want to get knocked out of it because it went down 5% and I'm trying to hold it for 20 years. But if it's a trade and it goes down 5% or 10% or whatever, then yes, I want to knock that out, because when you buy a stock or an ETF as a trade, you're not planning on it going down if you're long. So if it does go down, you have to admit you're wrong, right? So you need good risk management, and you need not to always try to be right. You just want to learn how to make money in the markets and be able to admit when you're wrong. So traders, should, when you're thinking about trading with your trading plan, you really want to focus upon discipline. You want to focus upon risk management. You want to focus upon, choosing the right entry and exit points. You want to learn which indicators you're going to use consistently, which ones you're not. You got to develop a consistent strategy, quite frankly. And you also got to keep in mind too that you're going to have to manage your emotions and to stick to the strategy, even in the face of market volatility. So, traders should never risk more than they can afford to lose. Should always have a plan in place for managing their risk, and should have a solid plan in place so that they can succeed in trend trading. Now, I also just want to stop for a minute and make a few comments about, trend trading, maybe some misconceptions, because unlike some traders, trend traders do not attempt to predict or forecast price levels. That's not really something that a trend trader does. I mean, he may use tools that maybe give him an idea of how much a stock may be able to go up, but he's not really forecasting or predicting what the stock market is going to do next week or next month. He's really finding a trend that is real, that is intact, and he's riding that trend like a wave. So whenever someone, maybe like someone who is a surfer, who's a surfer, he's looking for a wave to ride. So he'll ride that wave until it's over, and then he looks for another one. And when you're a surfer, you get a good idea of when that wave is beginning to peak, and then you're wanting to move on to the next wave. So that's kind of the same way in trend trading. Trend traders who are really know what they're doing, they know that they can't predict the future. And so they simply identify and exploit new trends as they develop and then exit them when they reverse, right? Or when they end. So just like a surfer, I like to think about a surfer when I think about trend trading. It kind of makes sense to me. So to identify a new buy signal, the trend trader isn't looking at the news, right? He's not listening to the news. He's not consulting the opinions or predictions of some market guru. He's not even relying upon his own emotions or his own feelings. What he's doing is he's relying upon a rules-based system and signals that are generated by the price and volume data available on a stock chart. So trend traders don't try to time the market by buying at the bottom and selling at the absolute top. Instead, they wait for a confirmed uptrend or a downtrend to develop before taking any action. Perfect example is whenever I enter a position uptrend, I will typically wait for a stock to be at least 30% off of its lows before I will consider entering. And that may seem counterproductive, but it's actually been a very wise thing. That's just a little tool that I've used for many years. So whenever I'm looking at something as it's, maybe hitting a low, well, I'll usually wait for it to rally about 30% off of its bottom before I will even consider adding it as a position trade. So we don't like to try to buy right at the bottom. Most people who, try to do that oftentimes will end up just catch a falling knife and it'll go back down again. So you've really got to wait for the trend to develop. So they're not trying, trend traders don't try to time the market by buying at the top and selling at the bottom. And as I mentioned about stop losses, I really got to say, cut your losses short and let your winners run. I can't stress this enough. Most trend traders employ stop loss orders, and all the trend traders we teach here, all of our students, definitely are using stop losses. And if they're not, they should be, because we teach it. It's very, very important. And these automatically execute a sell order when the price reaches a level that would signal an end to the current trend. So this allows trend traders to, be able to go to work or to go do something, go play with their kids at the park or whatever, and not sit in front of a computer all day long. That stop loss is very powerful. And they allow you to maximize your gains and limit your losses, which is the old adage, cut your losses short and let your winners run. Also, before we bring this to a conclusion, because today's podcast isn't terribly long, I just really wanted to kind of talk about trend trading and provide a nice overview, especially for those of you who are new. We do have a lot of new members coming in this year at the beginning of the year. Many people sensing that the market is probably going to do something and they want to get ahead of it. And so I wanted to provide you with some just basic guidance on trend trading as we head into this new year, as this new year begins. I also want to talk about a brief history of trend trading that I find fascinating. So the idea of momentum-based trading and trading with the trend actually goes back centuries. It's not something that's brand new. In fact, the old market adage that I just quoted about cutting your losses short and letting your winners run was first attributed to the 18th century economist David Ricardo. Now I'm getting a little geeky with my economics. You got to bear with me here for a minute, but I think this is interesting. So David Ricardo was the very first one. He was an economist who was the very first one who really talked about cutting losers early and letting winners run. And so too, many of the greatest traders throughout the 20th century, we can think of guys like Bernard Baruch or Nicholas Darvis. They all understood the power of trading with, not against, the prevailing market trend. But the modern concept of trend trading, or trend following as it's also known, it really goes back to the commodity trading pits in Chicago. So professional commodity traders have long understood the importance of trading with the trend. And in fact, back in the early 80s, there were two famous commodity traders. There was a guy by the name of Richard Dennis and a guy by the name of Bill Eckhart. And they were engaged in a debate over whether trading was a skill that could be learned by the average person, or whether it was just, whether it was not a skill that anybody could learn. It was just dumb luck. Well, Mr. Eckhart believed that successful trading was an innate skill that could really only be enjoyed by those who were genetically predisposed, to it. Mr. Dennis, disagreed and believed that trading was a skill that anybody could learn, just like any other skill. And so in 1983, these two traders decided to conduct an experiment. This is really pretty interesting. They wanted to find out who was right. Was trend trading something that, anybody could learn, or was it something that, very, very difficult to learn and nobody really could? You just had to be kind of genetically predisposed to it. And so what they did was they took out advertisements in major business newspapers like the Wall Street Journal and Barron's, and what they were doing they were seeking apprentices for their study. And after being overwhelmed with more than 1,000 applicants, they settled on just a handful of students whom they called the quote-unquote turtles, the turtles. You might have heard of turtle trading. Well, they called these the turtles. And so all the students were called turtles, and each of the students who reportedly had little to no trading experience were invited to Chicago for an immersive 2-week training. And they were going to learn the basics of successful trend trading, and they were given a small amount of money for this trading purposes, for the purposes of the study. And within 4 years, this small group of traders, known as the turtles, had amassed more than 80% in compounded gains. And the rest was history, as they say. The experiment had proven Mr. Dennis right. Anyone who learned and applied the proper methods could succeed as a trader. And that's really what I want to stress to you out there today. You may be listening to me and saying, that sounds fun, but I don't think I could do that. Well, the truth is that you really can. We have seen, hundreds and hundreds, if not thousands of people come through followthemoney.com and learn the basics of trading and succeed, right? We have seen it. We have seen it over and over and over again. So it's not like you succeed every single trade. I think people get confused. They say, well, if I lose some money, well, then I guess I'll be a loser trader. Well, no, every trader loses money, right? In fact, I still lose money when I trade today. The point is that you have to cut your losses early. So yes, you may lose. You may pick a stock and it may do wrong. It may not do what you think it's going to do. It may not go up the way that your charting or your trading rules suggested that it might. But the whole point is that you stick to your rules and you cut that loss short, and then you let your winners run. And if you do that over and over again, you will have success over time. And that's what this study showed. So trend trading has been recognized as a valid method for profiting from the financial markets, for decades. And trend trading is clearly a concept that's here to stay. Now, there's also another question that arises oftentimes when people think about trend trading. They say, well, how much money can you make from trend trading? Can you make a lot or just make a little? Well, it's one of the most common questions that I receive from new and aspiring traders. They want to know how much money they can make as a trend trader. And this is a very difficult question to answer, of course, because it really depends upon a huge number of variables. How much trading capital do you have? I mean, obviously, the more money you have, well, the more you can make from each trade, right? If you're coming in with, $100, you can't expect to make $1,000 from a simple short-term trade. So you got to have some capital. It also depends upon your personal level of risk tolerance. If you have a higher risk tolerance, you're going to take more risk, and that means you might get more reward. But if you don't have a lot of risk tolerance, then you may kind of stick with more blue chip kind of stocks, and that means you're not going to make these massive percentage gains. But again, it all depends upon the amount of trading capital that you have. One of my favorite strategies is to focus upon doing large trades, like large amounts of money into blue chip stocks or large index ETFs. I like QQQ, for example. And then, you may put a lot of money into that trade. And then if it goes up, say 1 or 2%, well, you just made 1 or 2%, on that large pool of money. That's one strategy. I mean, obviously you can go for higher percentage. I'm going to put in less money and try to make 10%. But if you put in a large amount of money, say in a trade, relatively speaking, and it goes up, 1, 2, 3%, well, that sure does beat, the waiting for a year to earn that from the bank, putting that same amount of money in the bank, and you may not even earn 3% that year. So if you're able to earn, a small sliver, and you're able to do that over and over and over and over again, and that's a repeatable process, well, then you have something that may be a really cool strategy for you, right? And we've seen people do it all different kinds of ways. So it all really depends upon your risk tolerance there. You also may have different, personal trading aims and goals. One of my students for a long time, he used the trading that he was doing to be able to give. So he liked to be able to trade, and then he would say, I'm going to give away 50% of everything that I earn. Well, that's amazing, because now he had his motivation to give money to those in need. And so what he would do is he would say, I've got to make, this much money so that I can give, some away, and then I also have some for me. And so this kind of motivated him to trade and to do it properly so that he could give. And of course, he had to have money left over for his own self as well. It was kind of for both. And I thought that was a really powerful thing where you can, it all depends what your trading aims are. It all depends what your goals are. So let's suffice it to say that an experienced trend trader can earn far in excess of the annual market average returns. Okay, let's say that. That's certainly possible. If the S&P 500 returns, say, 8% in a given year, a trend trader can earn far in excess of that. But new trend traders should really focus less on trying to outperform the major stock index and really more upon trying not to lose their money, because most new traders are just going to lose money. It's just how it is. So you really want to make sure that you're not putting more at risk than you can afford to lose, right? That's a really, really important rule. In fact, this is one of the most important rules for all traders, whether they are a trend trader or not. You just want to keep your losses to a minimum. And many new traders will come in and they'll swing for the fences, right? Because oftentimes they may be desperate. or they don't have a lot of money, or they don't have any savings. It's like, I got to make some money, so I'm going to go trade. Well, that's probably the wrong motivation. You want to learn to trade like you would learn to ride a bike, or you want to learn to trade like you would learn any other skill. So you don't want to come in and just swing for the fences and try to hit the lottery kind of thing. That's probably the wrong way to look at it. You want to look at it like any other business. So you want to learn the skills of it. You want to take time to, mature in your understanding of how trend trading works. But again, so many times new traders will come in, they'll swing for the fences, they'll fail to use stop losses, and then they'll act surprised, when they lose half or more of their trading capital. They say, oh, trading doesn't work, Well, no, trading works just fine. It's just that if you don't have discipline, and if you fail to use stop losses, and if you're swinging for the fences and you're buying, stocks that don't have any value, and you're not using a rules-based system, well, yeah, you're going to lose money. You shouldn't be surprised. I mean, that's the sharks on Wall Street are waiting for people like that, right? And they eat them daily. So trust me, experienced trend traders can make excellent gains from the market, but trading success really begins with solid rules. So if you're just getting started in trading, I really encourage you to create a trading plan, right? Very, very powerful. And if you don't know how to get started, you can always go to followthemoney.com. If you sign up for our email list, followthemoney.com/email, you can get access to our top trend trading rules. So this is a great way to get started. And we also will provide you with a video that we did on the 12 lessons from the world's greatest traders. You can watch that video. I mean, those two resources alone, which we give out for free to anybody who signs up for our email list. I mean, that's those two resources alone are enough to really get you kickstarted, to really help you understand and think properly about the market. Now, it's not going to be everything that you need, of course. I mean, you're going to need more education. You got to keep learning. In fact, I'm still learning. I've been doing this for 25 years and I'm still learning. So I learn something new every day. So, but the point is that, if you don't know where to start, great place to go is to followthemoney.com/email and just sign up for our email list. Now, if you've already done that, and you've already got our top trend trading rules, and you've got our video, and all of our members have that, by the way. So if you're a member, don't go sign up for that because you've already got all that. But if you're say, well, I've already seen those and I've already listened to some of your podcasts, and I'm really thinking about what to do next. How do I make this an income in 2023? Well, I have two calls to action for you. I'd say number one, become a member here at Follow the Money and start getting our daily ideas. You can go and see our track record. You can see what we've done. You can see how our ideas perform. You can get access to our ETF leaderboard, which we put out, every single weekend, where you can find the top ETFs for that week. We put out position trading ideas every weekend in our Robinson report. So, those are very powerful. And then we have all kinds of resources here. We have our nightly trading alerts page with lots of different ideas for swing traders or position traders, whatever the case might be. But then if you're already a member and you say, well, I really, still want to even go deeper, well, that's where our boot camp. So the trend trading boot camp that we do here at Follow the Money is simply the most powerful thing that we've really ever done for trend trading. I mean, for helping people with trend trading. It's an 8-hour immersive, intensive, deep dive into how trend trading works and all the things that you've got to be thinking about to be able to succeed. This is what I want to tell you. You can really succeed with this. I see it all the time, and again, you're not going to make money on every single trade. You got to get that out of your mind. You can't think to yourself, oh, I lost money on a trade, so it's not going to work for me. No, you've got to get used to being able to understand that you're going to lose money on trades. Everybody loses money on trades. The very best traders ever lose money all the time on trades. The difference is they lose less money than they earn. Right? And how do you do that? By not trying to be right and instead admitting when you're wrong and keeping your stop loss fixed. And if your stop loss gets hit, then you get out, you cut your losses early, but you let your winners run. That's how it works. I mean, it really is, that straightforward, but I won't call it simple. It's not simple, but it is straightforward. Now, let's recap today because this has been fun. This has been a great podcast episode. I hope this has been helpful for you. We've been talking about trend trading in 2023. I think this is a good year for this. This is a really good year for learning trend trading. And our boot camp is a great way to get started. By the way, you can go to that followthemoney.com/bootcamp, and you can learn all about our trend trading boot camp and become a part of that. I strongly encourage you to do that if you're serious about trend trading this year. Also, if you want to learn about our member plans and prices, the memberships, just go to followthemoney.com/join and just take try us out for 7 days. We have a 7-day free trial. So you can try out, any of our plans for 7 days, check it out, see what you think, risk-free. So there's no obligation, of course. So let us know, come and, shoot us an email if you have a question. We're always here. We are here to provide services for our members all around the world. And we love helping new traders. I mean, it's just what we do. So we would love to help you if you're listening and say, I'd like to maybe do this year. Hey, don't let anything hold you back. Try it. It's really something that you can do. I've seen it happen many, many times. So in conclusion, let's just say this. Trend trading is a popular strategy that involves following the direction of a market, making informed decisions about when to enter and when to exit the trades. And by understanding your trends and using tools such as trend lines and moving averages and technical analysis and support and resistance and even fundamentals, which we really didn't cover too much in this because trend trading is really more about technical analysis as opposed to fundamentals, but still that's a very key thing. I like to combine both, which is obviously not the purpose of this podcast episode, but I like to use both. But by using these things, traders can identify key levels of support and resistance and determine when the best time to enter and when the best time to exit a trade is. So you want to have a well-defined trading plan. You want to have sound risk management strategies like those stop losses I was talking about. Those are crucial for success in trend trading. And traders should have a plan in place so that they can manage their emotions and stick to their strategy and manage their risk and not end up in a place where, they're just giving their money to Wall Street because they don't have any rules. So in this episode, we've really covered the basics of trend trading, and we've tried to illustrate how you can do this. You can really, take on this new skill in 2023, and it'll be something that you're learning for a long time. So don't think that you're just going to learn it once and then that's it, and then you'll be an expert and you'll always know. Well, you're going to know some concepts forever, but you're going to have to learn new stuff all the time. So that's just like anything. When you start a business, you don't know everything, but you know enough to get started. It's the same way with trading. You got to learn enough to get started, but then you're going to learn new things along the way, and you've got to have a good mind to admit when you're wrong, and you've got to have a good mind to be able to to embrace new ideas and to be adaptable. It's very, very important as a trader, and you got to stick to your trading plan. Right? Can't be changing your trading plan every day. Every time the market changes, you can't change your strategy or your plan, I should say. But really, you want to, focus on creating a trading plan that you're not going to violate. And so, I really hope this podcast has been helpful for you. I really do. And we hope this episode has provided you with valuable insights and inspiration for your own trend trading journey. It's Jerry Robinson here from Follow the Money Radio. Are you tired of feeling lost in the stock market and unsure how to make a profit? Look no further. FollowTheMoney.com is here to help you navigate the financial markets and to teach you how to prosper through our time-tested trading and investing strategies. Our team has years of experience in the financial markets, and we have developed our own proven trend trading system for identifying and capitalizing on market trends. When you become a member here at FollowTheMoney.com, you instantly become part of a global trading and investing community and unlock access to in-depth training and education, including video tutorials, live webinars, and exclusive market analysis tools, which includes our powerful Profit Tracker trend trading system. With our system, you'll be able to spot the next big trend and make informed investment and trading decisions that maximize your profits. Whether you're a seasoned trader or just starting out, our services will give you the tools and knowledge you need to succeed in the financial markets. Don't wait any longer to start your journey to financial freedom. Head over to followthemoney.com/join and enjoy a free 7-day trial of any of our membership plans completely risk-free with no obligation. Make 2023 the year that you start your path to trend trading and investing success. Head over to followthemoney.com/join and take a free 7-day trial today. All right, friends, welcome back to the final moments here of today's broadcast. Great to have you here for this topic of trend trading in 2023. We hope this episode has provided you with many valuable insights and inspiration for your own trend trading journey, as I had mentioned, and I want to thank you for tuning in. And as always, I'd like to leave you with a final word, this time written by the famous English novelist of the Victorian era, Mary Ann Evans, known better by her pen name, George Eliot, when she wrote, "It is never too late to be what you might have been." You know, life is full of opportunities, and it's never too late to pursue the dream that's in your heart. Don't let the past define you. Don't let others dictate your path, and don't be held back by your own self-doubt. Take a chance on yourself, and know that it's never too late to make a difference, to make an impact, and to make your mark on the world. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Till then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussion on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.